Hi, I'm Michael Batnick here with Barry Ritholtz, and today we're going to discuss, is the bull market over? Stick around. All right, Barry.
Yes.
Stocks fell 35% peak to trough. Make the case that the bull market isn't over.
So there's a lot of variables here, but let me give you the best pitch that maybe the secular bull market didn't end. So when we talk about bull markets, forget the 20% nonsense. That's all crap. What secular bull markets are long periods of time when the economy expands, corporations do well, revenues rise, profits go higher, and stocks make new all-time highs. Why?
None of that's happening, by the way.
Partly because profits continued to expand, but more importantly because investor sentiment was such that investors were willing to pay more and more for every dollar of earnings. In other words, it's part earnings improvement, part multiple expansion. When we look at these long periods of time, 1946 to 1966, 20-year post-war bull market, 1982 to 2000, and then 2013 to present, you end up with a consistent set of factors driving prices higher. Good economic expansion, good jobs, wage gains,
buybacks,
revenue increases, profit increases. And so when we look at these big periods of time, there are giant counter-cyclical moves that do not mean the post-war rally is over or do not mean the 80s and 90s bull market is over. Think about what took place in 1987. Not only did you have a 23% one-day drop, peak to trough, it was over 30%. When you look at what took place during the Thai baht crisis and the Asian currency crisis, that was almost 20%. The long-term capital management crash, also about 20%.
All right, hold on. Can I push back?
Sure.
Okay.
So my main point is just because you get a counter-cyclical move, and by the way, the opposite is true in bear markets. You've had rallies of 40, 50, 60% in bear markets doesn't mean the bear market is over. So just because we get a counter-cyclical move doesn't mean that all the factors that underlie the secular bull market is over.
But you could get a 60% move off the lows if you're down 80%, and that barely even registers on the chart. If you're down 35%, that takes away years of gains. So I just want to set the stage. Do you actually believe that the secular bull market is not over, or are you just saying that it's not necessarily over just because we had this decline?
Okay, so that's a fantastic question. I'm saying that we still can't put a stake in, we can't bury the bull market just yet. Why? Hypothetically, we come up with a vaccine, a cure, a treatment for this, and the stay in place, the shelter in place economic disaster that's led to, we're going to see 25, 30% unemployment. When that's over and people go back to work, what happens in, pick a date, August, September, October, when the worst of this is behind us, people return to jobs, life returns to normal? Do we resume on the prior path we're on, or do we just start all over? Remember,
hang on.
This is a total externality. This is Pearl Harbor and then some. This isn't, a market that's gone too far with a Fed that's tightened and inflation and the usual things that kill bull markets. This is a specific externality.
So even if earnings return to their highs, assuming that supply chains come back on, which is, these are all big assumptions. I highly doubt that investors are going to pay the same multiple as they did 6 months ago, even if earnings get back to where they were.
Well, that's a really interesting question. Will investors think about what actually would start to happen? Let's say there's a cure. Let's say there's a vaccine. Right? I don't mean tomorrow.
But what do you mean, let's say? What percentage, what do you think the likelihood of that happening is? Obviously
well, 100% there will be a cure, 100% there will be a vaccine. The question is the timing. If this goes on for 6 months, if we're locked down into October, this bull market is dead and buried, and it's going to take us a long time to start to recover.
Hold on, two things. First of all, what do you mean 100%? Where are you getting that number from?
You're asking me my opinion. what would be the end of the secular bull market?
No. I'm saying you said there's a 100% chance of a vaccine.
Oh, of course there's going to be a vaccine. This is not an alien virus from a different galaxy that we can't figure out. The coronavirus is a family of viruses that include the common cold, it includes influenza, it includes all these things. I'm pretty confident that not only will we find a way to treat this eventually, but we will find a vaccine for this. That no one is suggesting this is unbeatable. We beat polio, we beat tuberculosis, we beat smallpox. Eventually, human ingenuity will solve this, probably sooner rather than later. The question is that 30, 60, 90 days, or is that 8 months, 12 months, 18 months?
So let's get back to what you just said. How quickly do we need to recover and make new highs? In other words, let's say that the lows are in. Let's just say that. And in 2 years, we're at all-time highs. It takes 2 years. Would that mean that the bull market didn't end? And let me ask you as I'm speaking out loud.
That's a really interesting question.
But wait, as I'm speaking out loud, who cares? Like, these labels, do they matter?
Well, that's a smart question. They matter because they influence people in a very negative way. Every time there's a headline that says this is a new bull market, people get a little goofy. Look at where, while we're recording this, the Dow is off 1,000 points. We're down about 5% on the day. If you listen to the chatter that a 20% rally off the lows is a new bull market,
well, that's silly.
You got, but the same, flipping on the other side. Because stocks fall 20%, it doesn't mean that the same underlying forces that are driving prices higher, that are expanding the economy, that are leading to jobs and corporate growth, etc., is over.
This is a very weird situation that we're living in, obviously. I mean, like
unique,
I said,
absolutely unique.
Stocks fell 35%. Unemployment could be 20% or higher. GDP can fall 10% or more easily. How could you say anything other than the bull market is over?
Because when you look at a bull market and what drives it and what defines it, if this is merely a temporary aberration, an externality that we get past pretty quickly, there's no reason to assume the prior expansion wouldn't continue.
But I feel like we're speaking
hypotheticals.
It's like a
meteor. It's like a volcano blew up and we're dealing with it. How quickly can we get ahead of it? It has nothing to do with the underlying economy, the underlying stock market, valuations, etc. If anything, valuations are now fairly attractive relative to what they were. They're still not fantastic.
Relative to the way things used to be. Are we going back to the way things used to be? So we're speaking in hypotheticals. What do you believe?
So,
like, if I had to press you.
All right. So at the time of September 11th, I was working in the Long Island office of a firm that was headquartered on the 37th floor of Two World Trade. And I remember the days after 9/11, it felt like nothing would ever get back to normal. We didn't even know if they would reopen the stock market. It was that sort of moment of the world has changed and nothing will ever be right again. But eventually, you rebuild, you put the pieces back together again, and you move forward into the next financial crisis, which was 08-09. Here we are, 12 years later, and this feels like the end of the world. But most of history, in fact, all of history, has proven that betting on the end of the world is a losing bet. Eventually, maybe at 5 billion years in the future, when the sun blows up, that will be a winning bet. But
man, you're so bearish. Jeez.
Betting on the end of civilization has always been a losing bet. And in the comments, people are going to say, what about the Romans? What about the Mayans? What about the Aztecs? Yeah. But some form of civilization, the Greeks were replaced by the Romans, which were replaced by the Europeans, which ultimately led to the New World and the modern civilization. Betting against the ingenuity of human beings is a losing bet.
Okay, so I say bull market over, but I hope it resumes very soon. Would you say that's fair?
Listen, you could very well be right. It really depends on how fast we get past the coronavirus. If we wake up tomorrow and there's a treatment for this, so shelter in place ends,
but
and then there's a vaccine, I would argue that the same bull market could continue.
Oh, great. So now we're going to have to argue about this. But my point is, the bull market is over today. It doesn't mean that it can't resume in 6 months or a year, but it's right now it's over. This is not a bull market. I mean, come on. Isn't that obvious? How is this a bull market?
This is an externality. The argument I would want to abstractly make, and you don't believe this. I'm just arguing with you. The argument I would want to make is this is a counter trend rally, a counter trend sell-off caused by an externality, and 35%, as soon as that externality is behind us, 35%. We have never had I think it's 4 out of 5 Americans being told stay at home, don't go to work, don't leave your house. Yeah. When did that ever happen? Even during World War II, you could still move about. We weren't London during the Blitz. We were told to keep our lights out if you're along the coast. Don't give the submarines anything to aim at. Back when I was, a kid during World War II. But
I don't know how we got here.
But this is a one-off externality. There's nothing to compare it with. And once it's over, there's no reason to think the underlying factors that were driving the bull market that began after the financial crisis wouldn't resume their prior trends.
Well, I hope you're right. All right. That's a good place to leave it. Barry, good job.
Thanks, Mike.